Good morning, I'm Larry Steinhouse, and welcome to Money Chat Now. Money Chat Now is a politically charged stock market pre-show giving you the politics behind the biggest moves in the stock market. It is presented with comedic common sense by an expert in financial literacy, and hey, that's me, Larry Steinhouse. All right, today is Tuesday, March 29th, and of course I want to welcome you to the show. We are here live on WWDB Radio 860 AM in Philadelphia, and we are live on Facebook, Twitter, LinkedIn, and YouTube. I think we're on YouTube. I don't know, but if you do a search for us on YouTube, you can't find us anymore because I guess apparently YouTube doesn't like my politics. But if you're on YouTube, let me know. I'd love to know if you could actually find this show. But if you want to, you can find me on Facebook as well, and that's probably where you're going to find me. You can also find me on TikTok and other social media by searching Larry Steinhouse. Hey, just a reminder, if you're watching online, hit that like button, hit that share button, and if you're on YouTube, I don't know, say hi. There you go, whatever. Don't forget to subscribe to the YouTube channel because maybe you'll be able to find it. And like the Money Chat Now page on Facebook. You can comment live during the show on YouTube, Facebook, LinkedIn, and Twitter. And please say hi so I know you're watching. By the way, if you're commenting from a group and it's not the Money Chat Now fan page, your name may not show up on my dashboard. Please go to the Money Chat Now page, hit like, and comment there so I can recognize you. Of course, I want to say hello to a couple of people watching right now. I want to say hello to James, who's actually watching on YouTube. Great, thank you, James. Linda, my lovely wife, is watching. Michael, and of course, Joe. Thank you, guys. I appreciate it. By the way, Money Chat Now is brought to you by Investor Schooling, and you can attend a complimentary class this Thursday by going to investorschooling.com. And there you will learn about real estate investing and stock options trading from those who do it every day. All right, we got a couple of people checking in from YouTube. Thank you, guys. I appreciate it because nobody can figure out where this show is on YouTube. Hey, Vin and James and Abraham, thanks so much. All right, let's talk about what we're going to be talking about today is the futures update. We're going to be talking about recession signals. We're going to be talking about new regulations for traders, business travel is back, and more automobile delays. All right, let's talk about the futures. So on the surface, yesterday looked like a simple bipolar day. The market started out up, and then it dropped. I don't know, it dropped and popped at the end. It was kind of weird. I've been talking about how the market is no longer worried about surprises and how the only thing that can happen now are really good things. Things like the war ending, things like good earnings. So that's basically what's going to carry the market right now. And as we know, the war in Ukraine didn't end yet, but apparently the war between Chris Rock and Will Smith may have. How wild was that? I still think that's hysterical. And I still want to know, who's more brave, President Zelensky or Chris Rock? Anyway, when Will Smith comes up and smacks Chris Rock across the face, I got to tell you, on primetime TV, that's probably the greatest thing ever that's happened on primetime TV. It's definitely going to make television history and probably bring the viewership back to the Academy Awards. So what do you think? You think that was staged? I don't know. Hey, did you guys even know that the awards were on Sunday night? I didn't, and I didn't care. Apparently no one else does either. So it's probably a good thing for ratings in the future. The real question is if it was staged for ratings, and honestly, we may never know. Anyway, getting back to the lack of surprises in the market, I've mentioned that war, interest rates, and even bond rates are no longer scaring Wall Street, so that may make the market, react, more normal, right? The new normal, of course. Everybody has to use the word the new normal now. And the new normal reacts more to oil prices than bond rates, and that's what happened yesterday. Actually, if you actually noticed it, I showed it in a class yesterday to a bunch of my students, but it's interesting if you want to take a look and go back. The oil prices actually were the inverted chart of the stock market yesterday. As the price of oil rose to a peak yesterday of almost 113, the Dow dropped to a bottom of 34,550. And then as the price of oil dropped from its high yesterday, the Dow rose to a high of the day of about 34,995. Now, I'm going to tell you something else. Here's a surprise, and it's actually a good surprise. The VIX, which is also often caused the fear indicator of the market, dropped below 20 for the first time since January 13th. The VIX fear indicator is a ratio of option trades that investors use to determine if the market is scary or not. For most of the time during trading before COVID, the VIX was maybe the 12, 13 range. Maybe it hit 16 every once in a while. But when it would hit 20 or 22, the market became a very scary place. In the height of the crazy times for COVID, the VIX broke a record when it closed at 53 on January 20th, 2020. I actually believe it peaked a lot higher that day before settling. But 53, wow, that is a scary number. The VIX is also an interesting number to watch, and if you're new to the stock market, you should pay attention to this number. It's fun to see how it affects your portfolio, and as I said earlier, the VIX is below 20, and that's a great number. But remember, I was used to it to being about 13, so let's see where it goes. By the way, if you want to, if you're really curious, and there are certain funds you could trade that have a direct correlation to the VIX, there's one called VIXY, VIXY, which is the symbol for a fund. And, if you want to play with that, that's fine. It's interesting. It goes up, it goes down. And if you want to ride it, you can. I'm just not a big fan of doing that. I like the stocks or the stock options better. The other thing that was interesting was Tesla was a big mover as they were discussing a stock split and a dividend. The stock popped about 8%. And another one of my big favorite stocks and a big mover was CCL, and it actually moved up again yesterday. It moved up again 5.5%, and AAL, being my biggest play, stayed above 17. Now, this is good news, and I'm going to tell you right now, when it breaks 1750, the stock should shoot up to 19, no problem. I still need 21 to make it a good play for me, but I have faith in this play. So watch it. Watch the stock today. If it goes and ends over 1750, it's going to be awesome. All right, I want to say hello to a couple of more people watching. Hey, Tommy. Hey, Charles. Hey, Michael and Jose. And, of course, Bill. Thank you so much for watching. I always appreciate you guys. All right, I know a bunch of you guys are watching because you want to see, you want me to discuss what I posted this morning, which is what's going on with recession signals. Now, listen, I've been saying for months now how I believe we are in the middle of 2006. When I say that, I don't mean we actually time traveled. I mean that we're actually at the same point that we were in 2006 when the economy was riding high and on its way to 2008. And we all know what happened in 2008. Well, in 2006, we had housing prices soaring. We had houses selling quickly, and then, of course, it all dropped off. I keep comparing what is happening now to what happened then, and even have the same feeling that I had back then. So, I don't know if you guys, I don't know, you guys get gut feelings? I had a gut feeling in 2006 that things were going to go bad, and sure enough, they did. Well, I'm getting that same gut feeling right now. But here's another danger signal that just flashed up. For the first time since 2006, the U.S. 5-year and 30-year Treasury yields inverted yesterday. So the yield on the 5-year Treasury note rose to 2.56%. So that's 5-year was 2.56%, while the 30-year fell to 2.55%. Now, this is the first time the shorter-dated 5-year Treasury yield has risen above the longer-dated 30-year government bond since 2006. Isn't that odd that it's the same thing, 2006, there it comes again? And it's a very small difference, by the way, but it's a very scary difference. But it could be a significant indicator. Let me explain what this indicator means and why it's a signal for a recession. A very simple explanation of this phenomena would be if you went into a bank and they gave you the choice of 2 CDs, right? One was a 30-year CD and it paid you 2.55%, and the other was a 5-year CD and it paid you 2.56%. Where would you put your money? Obviously you don't want to tie up your money for long, and if you could get more money for tying up your money for less time, that's where you're going to put it. So if you understood that you can only tie up your money for 5 years and get a better rate, then of course you'd pick the 5-year. This example is rudimentary, but it shows that Wall Street and Main Street have a bleaker long-term view of the economy. There are many signs of 2006 here, including the fact that the government handed out money the past 2 years. It was similar to the bailouts after the attacks on 9/11. We, of course, have the normal cycles, and the normal cycle actually says that we're at the peak. Actually, I just want you to know the cycle should have started to peak in 2020, but the scamdemic delayed it 2 years. Look, as I've been saying for months now, get prepared. Think back to what happened in 2008. Think about it. Think what happened to you. Think what happened to other people. Credit lines were shut down, mortgages were called, and money was scarce. So make sure you're ready, because not only are the bargains coming, but those who have the means to buy them will be picking up the deals, and of course they're going to be, preparing themselves for the future. Bargains will come in the form of cheaper real estate, cheaper business opportunities, and cheaper stocks. Are you prepared? I've been teaching this preparedness every week, and if you aren't, come see me because you're going to be really happy that you did. All right, I want to say hello to Dan, who's going to be speaking at our event on the 24th. I'll be talking about that in a little while. So Dan Jaskovsky, say hi, I totally appreciate you watching. And of course, Jill, thank you so much. Let's talk about some new regulations for traders. So in the past few years, we've seen a slew of new traders get into stocks, options, and other high-risk concepts. A big group of these people are those with no experience. They learn a few tricks and for the most part got lucky. Excuse me. Well, most of them have never actually lived through a normal change in the market. The scamdemic wreaked havoc on the market, but the comeback was like nothing ever experienced before. Many of the new traders only had this period as experience they had. In fact, as a professional trader with a set of tried and true rules, believe it or not, it was the worst year I ever had. So because my rules work so well, normal, they didn't work last year. Well, because of the fear of the general public losing their hard-earned money on bad plays, the government is attempting to step in and regulate high-risk trading. This trading includes stock options, advanced stock options such as spreads, straddles, iron condors, and other, and it may include Forex trading and Bitcoin trading as well. Many people, they go and they try to learn the mechanics of trading. They learn how to actually place a trade, but they don't understand what they just bought. So FINRA recently wrote a report with these concerns. They stated the following: the number of accounts trading in complex products and options has increased significantly over the recent years. However, important regulatory concerns arise when investors trade complex products without understanding their unique characteristics and risks. Basically, FINRA is concerning themselves with things that are none of their business, in my opinion. But it is what it is. One reason they may be getting involved is because the potential for lawsuits against brokers who allow their account holders to trade these high-risk investments. FINRA's solution is make investors take a class and test before they're allowed to trade any of the high-risk plays. Well, frankly, although I believe people should have an education and a plan before trading these high-risk investments, it is really not for the regulators to decide what you should be allowed to do or not to do with your money. Doesn't that sound like the last 2 years and where you're allowed to go, where you're not allowed to go? It would be like going to a casino and telling someone they can't play blackjack until they take a full-day course on how the game works. It's not realistic, and it's not fair, and it's not up to regulators to regulate this. Here's an interesting fact about how I teach in investor schooling, believe it or not, right? I actually have a small test that I ask my students to take verbally before I give them my blessings to trade options. Now, I don't forbid them to trade. They can trade anytime they want. But I warn them that the risk is much higher if they can't answer 3 simple questions about how a stock option is priced. Before I wrote the rules that I trade by and teach, I traded blindly for 4 years. It wasn't very fun. I often tell people if you want to trade without rules or a plan, take $100 bills, light them on fire, and throw them into the fireplace. It'll be more fun. And if you really want to learn how to trade stock options to fully understand the stock market, it just takes you showing up for, of course, a complimentary class this Thursday night at 7. So take a listen to this commercial and you can find out more information.
Okay, so you've thought about investing in real estate, houses, apartment buildings, properties, but don't really know where to start. Well, what if you could very easily learn how to gain strategies to use other people's money to buy and sell houses in the Philadelphia area? If you could learn and network with successful area real estate investors and how to produce monthly income on rental properties without headaches, that place is Investor Schooling. With Investor Schooling, you'll learn from 2 Philadelphia area rockstar real estate investors, Phil Falcone and Larry Steinhouse, about how to buy and sell properties the easy way and teach you basic and advanced techniques to help you make money in real estate. You can attend Investor Schooling in person or online visual classes 8 times a month. You can and will learn how to make money in real estate. Call for free information and get a complimentary pass to one of these classes. But don't delay, as these complimentary passes are limited. Call the number on your screen now or visit investorschooling.com. investorschooling.com. All
right, welcome back to Money Chat Now. I'm your host, Larry Steinhouse. And of course, if you'd like more information on Investor Schooling, you can go to investorschooling.com or you can call 866-424-2829, 866-424-2829, or go to investorschooling.com. Hey, I want to thank you all for listening on WWDB Radio 860 AM in Philadelphia. And if you're watching online, please hit that share button so you can help your friends learn about how to make more money. Hit that like button and let me know you enjoy the show. And of course, you can leave comments on Facebook, Twitter, LinkedIn, and YouTube, if you can find it on YouTube, and I'll try to respond to them. All right, right now the futures are up 107. They actually came down just a little bit. It's not that bad, but they came down a little bit. The S&P is up 13, and the NASDAQ is up 28. We talked about recession signals. Look, it is coming. The recession is coming. Definitely prepare for it. We talked about regulations for traders, and I don't know. I think that the government should just mind their own business and let people do what they want. They want to lose money, let them lose money. They can come to investor schooling and learn how to trade, and they don't have to deal with that anymore. All right, coming up, we're going to be talking about business travel and more automotive delays. But first, and then of course, we're going to be talking about today's picks and plays after that. But first, did you hit that like button yet? Did you hit that share button yet? Don't forget to leave comments on Facebook, LinkedIn, YouTube. And if you're listening on WWDB Radio, be sure to set a preset to this station and listen every day at 7:30. Also, look up Money Chat Now on Facebook when you get home, and let me know what you think of the show. And real quick, before we get to the second half, we talked about the nonsense that the great Democrat assimilation has been causing. And if you want to do something about it, you want to be at the Washington Crossing Inn on April 24th. I've been telling you about a great event that we're going to be hosting at the Washington Crossing Inn in Bucks County. It's a Finances and Freedom event. Along with myself, we're going to have the outspoken Bill Spadea as a keynote speaker. Bill is a freedom fighter and the #1 talk show host in New Jersey. We also have Doug Mastriano as another keynote speaker. This guy's amazing. He led the battle against the ridiculous anti-constitutional mask and vaccine mandates, and Doug's story will mesmerize you as a leading contender for governor. We also have Dan Zatopsky, who's going to be talking to us about how to raise all the money you ever need. And I also think he's going to tell you how he lost about, 150 pounds? Nah, I think it was more like 70 pounds. But he looks really good. So go to 4mmw.com, 4mmw.com, and register for this event before the price increase, 4mmw.com. I actually think we only have about 30 seats left, so you want to make sure you register as soon as possible. All right, let's get into the second half, and let's talk about business travel being back. So we all know that what happened in the past 2 years when government overreach and fears of the big bad coronavirus closed down just about every public place, except investor schooling. We never closed. Of course, it also caused the fear of travel and how you might die if you flew on a plane or went to a conference. Well, finally, people are waking up from their COVID comas and traveling again. So the increase is driven by a host of factors. Workers are returning to offices, restrictions are dropping off domestically and internationally, and clients who once steered away from in-person meetings are once again comfortable with face-to-face get-togethers. The return is a boon for conference centers, airlines, and hotels, which reported a jump in bookings related to business travelers. In one example of the shift, travel and expense management company, a company called Campbell Travel, said that 67% of its business in March was related to corporate travel, which is up from 51% in January. For workers returning to the road, it's a chance to close deals that are best done in person and reconnect with colleagues and clients. I hated when I had to do Zoom appointments to buy something. It was like, really? We're doing advertising for investor schooling, and I got to do a Zoom appointment? Come in. Bring me a donut. Bring me a cup of coffee. Show me you care about me. Don't show me your kids' pictures behind you on the messy shelves. And the kid running by and going, Mommy, Mommy. I hated that. All right, in my business, I would love to travel. I actually used to travel to other states to talk to audience about finances and how to make their life better financially. And I definitely miss those days, but they're all coming back. In fact, I'm actually presenting this week to an audience that I was booked 2 years ago that had been postponed several times until now. Look, I also know you heard me a little while ago. I talked about the Finance and Freedom event, and that's coming up on April 24th, and that's another huge event, and we weren't able to have it until now. So traveling on airplanes will finally become normal as long as Gestapo Joe and the Nazis known as Democrats don't renew the useless mask mandate. Oh man, we got 18 more days, 19 more days till that idiot drops the mandate or doesn't renew it. So what does it mean to you? Look, I've been telling you that the only recovery place still open is the travel stocks. All the airlines and cruise stocks are moving up, and you should be in them. Travel is going to take off this year, and you're going to benefit with the right travel stocks. So I'm going to tell you right now, get into them now. Let's talk real quick about what's going on with with automobile delays. So as government overreach affected the world and the world's production of computer chips and supplies was slowed down, the automobile manufacturing companies struggled through not being able to produce cars and trucks fast enough, right? This led to a shortage of new cars and trucks. Well, just when we thought it might get better, General Motors actually announced it will halt pickup truck production at a factory in Indiana for about 2 weeks next month due to an ongoing shortage of semiconductor chips. Yeah, right. What was once a supply chain problem, including the bottleneck in the Pacific, has now turned into a problem caused by the war in Ukraine. The good news, is that the automakers are seeing some relief in this problem as the bottlenecks in the Pacific and other supply chain issues are resolving itself. It appears we are nearing the end of this problem, but it's not over yet. All right, look, don't forget, prepare yourself for the economy, and I'm going to tell you something else. Don't buy a car or truck yet. Wait a year, unless you have to. If you wait about a year, trust me, supply and demand is going to change. There's going to be a ton of supply, and there's going to be a lot less demand because people aren't going to have the money. And when all the new cars and trucks finally come back, people will be trading in their used cars for new ones, and used cars are going to be everywhere. Always remember, timing is everything. All right, let's take a break, and we'll come back, and we'll talk about it in a minute.
Investor schooling. Those guys are everywhere.
Investor schooling? Those guys are everywhere.
Investor schooling?
Those guys are everywhere.
Investor Schooling. Those guys are everywhere. Register for a free class at investorschooling.com.
All right, welcome back to Money Chat Now. I'm your host, Larry Steinhouse, and of course, if you'd like more information on investor schooling, you can go to investorschooling.com or call 866-424-2829, 866-424-2829, and there you'll learn about real estate investing and stock options trading. All right, real quick, the futures are up 160. Yeah, they came back nice. The S&P is up 20, and the NASDAQ is up 66. Oh, I got to just mention this real quick. My two favorite stocks, AAL, is at 1769. Yeah, man. And, of course, Facebook is at 225. Beautiful, beautiful, beautiful. Hey, we talked about new regulations for traders, and we talked about the fact that you might have to get permission from the regulators to trade stocks. Do me a favor. We talked about the fact that business travel is back, and, of course, more automobile delays. Boy. And, of course, I'm going to be talking about today's picks and plays. But first, did you guys hit that share button? Did you hit that like button? Come on. Let everybody know what great stock plays are coming by sharing this information. And don't forget to share it in groups, too. You can share it in groups as well and let people know. And don't forget to leave comments on Facebook and Twitter. Tommy had some kind of comment up there with a hand smack, but I'm not exactly sure what it was. Is that a hand smacking? Is that Will Smith smacking? Anyway, all right. Anyway, if you're listening on WWDB Radio, set one of your presets to this channel and listen every day at 7:30 for all you need to know about politics behind the stock market. All right, it looks like we're going to have another good day today. I'm definitely seeing a pattern in the market that is consistent with a continuing uptrend. I see the Dow breaking out. Now listen for this number. 35,600 will be the mark, and if it passes that, it'll be a sign that it will continue to break out and upward. That's only, by the way, it's only 600 points away, so keep that in mind. I'm also seeing the same pattern in a number of stocks, including, of course, my favorite, American Airlines. The breakthrough point of this stock, so all you guys are in this stock and been following me, the breakthrough point of this stock is 1765, and pre-market right now, it's at 1769. And I'm going to tell you, so now it has to end over that. Don't forget, it has to end over that. And it could happen today, and I certainly believe it will happen by the week's end. Meta is also going to have a breakout at 233, and that'll drive the stock to 250 before earnings. Apple will also break the 183 mark, and it'll regain the $1 trillion valuation mark, and then head, of course, to 200. Look, so why was Larry talking doom and gloom at the beginning of the show? Well, this is how it works. The doom and gloom of the recession is coming, but it isn't here yet. So it'll come fast and strong, but you can still make money along the way, and you can still make money while it's happening, right? So pay attention to this show and come see me at Investor Schooling to really learn how to take advantage of it. All right, let's look at the futures one last time right now. The Dow is up 155, beautiful. The S&P is up 19, and the Nasdaq is up 64.75. Of course, like I said before, watch for the oil. All right, Bitcoin is about 48,000 again, and Ether is about 3,400 again, and it just goes to show you that patience in crypto pays off if you buy with the same patience. So I'm waiting for the next time Bitcoin hits 32,000, and the next time Ethereum hits 2,300 for me to buy. Both gold and silver are moving down slowly again as investors move their money to more exciting places. Oh, I got to say real quick, I got to say hello to Kalisha watching online. Hey, Kalisha, thanks so much. Give your dad a hug. All right, Treasury bond. The Treasury bond is now over 2.5%. And welcome to the new normal. That's crazy. Oil is about 106 a barrel. And it's also, and this is, like I said, it's the leading market indicator. When oil prices go down, the market goes up. Yesterday, as I said earlier, we saw the oil prices move up and the market move down. And we saw the oil prices move back down and then the market move back up. So oil prices are the leading indicator. Watch for it. Watch the oil prices and you can actually watch the market change. Hey, look, we all know that a new financial situation is coming. And the real question is it going to be a real recession or a simple big downturn? Well, if you want to survive through it, you should order my book. Go to barnesandnoble.com and look for Money Hacks by Larry Steinhouse. Pre-order it, and I promise you're going to learn something. You won't get it till July, but if you pre-order it now, actually, if you pre-order it now and show up for a class and show me that you pre-ordered it, I'll actually give you another signed copy for free. Hey, and if you've been listening, my accountant confirms that it might be tax deductible. Tomorrow night, I also want to let you guys know that we have a meet and greet event in Chambers 19 restaurant in Doylestown. Don't forget to go there. It'll be there between 7 and 9 p.m. tomorrow. You'll find a bunch of us over there, and you'll find us talking about real estate and other investments, and you'll really have a good time, so go there. Hey, I want to thank all the listeners on WWDB Radio 860 AM in Philadelphia, and I want to thank you for your continued support. If you're enjoying the show, please leave comments on the WWDB fan page and look for us online. My name, of course, is Larry Steinhouse, and I am the host of Money Chat Now, and I am the CEO of Investor Schooling. Don't forget to sign up, of course, also for the Freedom and Finances event, which is at 4mmw.com. You can sign up right there. And I want to remind you once again that from time to time, I own some of the assets and options discussed in this show, and the opinions discussed in this show is solely mine, and no one has asked me to discuss them. I look forward to seeing you tomorrow. Make it a profitable day.